Hi, Kevin Wright here, back with another weekly property finance tip. What's it about this week? 80% mortgages. And the question I'm going to ask this week is, are 80% mortgages a false economy? In other words, are they a waste of time? So if you've been thinking about getting a 80% buy-to-let mortgage, keep watching. Most people want to get a buy-to-let mortgage, go for 75%. Why? Because there's a lot of choice. Pretty much every lender does a 75% product. And when there's a lot of a product, you tend to get better deals, certainly better interest rates, lower interest rates, maybe lower setup fees too, because you've got a lot of lenders all out there trying to get some business. There's another type of mortgage as well. It's the same type of mortgage, but it's another loan to value, and it's 80%. I understand that if you're looking to refinance a property that you've refurbed, you want to pull out as much cash as possible so that can go into your next project. But is going up to 80% from 75%, is that actually worthwhile? Because clearly you get some more money out, but what's the cost of getting more money out? That's what we're going to look at this week. Now, what's the big deal with 80% mortgages then? Well, clearly you're going to get that extra 5%, but are they as freely available as the 75%? No, they're not. There's a lot less 80% deals going around, and they tend to be quite limited tranches of money. So a lender would release an 80% deal and put a certain amount of money aside for that, and when that's all gone, when that's all accounted for, they just pull that product. Sometimes that can be in as little as 24, 48 hours. So they can be released and gone as fast as that. So does that mean that they're good? Well, not necessarily. Let's drill down in some of the detail and understand what's going on here. And as I usually do in anything when I'm talking about numbers, I use round numbers, not necessarily because they're relative to the type of deal that you're doing or the value of deal you're doing, but simply because it's easy to understand. So we're just going to talk about a property that you're buying for 100,000 and you want a mortgage on it, or you could be refinancing it at 100,000, no matter which. The normal thing you do is you get a 75% mortgage, i.e. 75,000 on 100,000 purchase or mortgage, and you'll get a wide range of lenders and some pretty good deals most of the time in comparison. What about these 80% mortgages then? Well, let's look at actually what you're getting extra and then quantify what you're paying or likely to pay to get that extra. 80% of 100 is obviously 80,000. So the difference between a 75 and an 80% mortgage in this case is £5,000. What's it going to cost you to get your £5,000 extra out of the deal? So the first thing is rate. Now, the rates for 80% mortgages are nowhere near as competitive as they are for 75% mortgages. So you're going to be paying a premium rate. You need to be clear on how much a month that is going to cost you over, let's say you do a 2-year deal. So you need to look at how much is the differential in monthly payments. So pick the best deal, or get your broker to pick the best deal on a 75% rate, then pick the best deal on a 80% rate and see what the difference is. How much a month? Is it £50 a month extra? Is it £100 a month extra? What is it? And then top that up over the 2 years. And if you're doing a 5-year deal, tot it up over the 5 years. But so tot it up over the lifetime of the deal. And so that's one thing, because you'll almost certainly not be keeping, using the figures we're talking about here, you're almost certainly not going to be keeping all that 5,000, because that's going to be leaking out and being repaid back to the lender over the term of the deal. The next thing to look at is the setup fees. Now, what are the setup fees for 80% mortgages compared to the best 75% mortgage? And it could be that you're paying more for the 80% in terms of a setup fee. You're paying a bigger setup fee than you would have to pay if you went for a 75% mortgage. So once again, work with your broker, check out the difference between the best setup fee on a 75% deal and what you've got to pay to get an 80% deal. And again, if you've got to pay more, you're giving back some of that money. Using the example, some of that $5,000. So you're losing some of it on the rate. You could be losing some of it on the setup fee too. The next thing to check out with your broker is the rental income multiple. There's always a ratio between the rental income and the mortgage payment, and the lender likes a bit of leeway. They like some additional rent to make sure you're always going to be in a position to cover the mortgage payment. Calculation is more severe for an 80% than it is for a 75%. So your rent has got to be that much bigger to even qualify for an 80% mortgage. It'd be a good idea to check all of this out. Now, we were talking about this 100,000 purchase or refinance. And to get an extra £5,000 out in this example case, how much of it over the term of the deal that you're taking, 2 years or whatever it is, how much are you going to give back to the lender? And if you're going to give back more than half of it to the lender, then you've got to question whether it's actually worth going for, whether you'd be better off to get a 75% and get a much more competitive deal, leave a bit more cash in there, but then, you know, your cash flow each month is going to be better. So effectively, you can't pull that £5,000 out day one, but you're going to pull it out on a drip fee basis month by month. So that's it for this week. Just chatting around the difference between 80 and 75% mortgages and making sure that you don't stumble blindly into an 80% and think that it's a fantastic deal when with closer examination, it might not be as great as you think. So that's it for this week. And hey, hang around because I've got something else to show you. Thanks for watching this video. If you've enjoyed it, hey, I've got an Instagram channel too. There's some really interesting content on there and it's all short, snappy stuff. So it's at Kevin Wright Property. Check out the link here. Go find me on Instagram.